Right now, something quiet is happening in the financial world, and most people are missing it completely. Wars, energy crises, inflation that won't fully go away, interest rates that moved faster than anyone predicted. If your portfolio felt uncomfortable over the last 2 years, that feeling was telling you something. Here is what the institutions already know. According to the World Gold Council, central banks around the world, China, India, Poland, and Turkey, bought more than 1,000 tons of gold every single year from 2022 to 2024. That is nearly double the pace of the previous decade. They are not doing that by accident. But here is the part most retail investors never hear. You don't need a vault, you don't need a broker with special access, and you don't need to buy a single gold coin. There is a way to own gold that fits inside a regular brokerage account, starting from as little as $50. In this video, I'll show you exactly why gold belongs in a modern portfolio, how a single ETF gives you direct exposure to physical gold bullion, no jargon, no complexity, and what to look for before you buy anything. Stay with me, because in about 60 seconds, I'm going to show you a number that central banks have been quietly watching, and once you see it, the way you think about your portfolio will not be the same. Gold has been a store of value for over 5,000 years, but I'm not here to talk about history for its own sake. I want to talk about what gold actually does inside a modern portfolio, and why that function matters more right now than it has in over a decade. Gold does three things that most assets cannot do simultaneously. It holds value when currencies weaken. It tends to rise when fear enters the market, and it moves independently from equities during a crisis, meaning when stocks fall, gold often doesn't. During the 2022 rate shock, when both stocks and bonds fell simultaneously, which almost never happens, gold held its value while a traditional 60-40 portfolio lost over 15%. That is not a coincidence. That is gold doing exactly what it is designed to do. Now look at the environment we are in today. Geopolitical tension across multiple regions, energy markets that remain deeply unstable, central banks actively reducing their dollar reserve exposure, and inflation that, while lower than its peak, has permanently reset the cost of living for most households. Every one of those factors has historically been a tailwind for gold. This is not speculation. This is pattern recognition across decades of data. Now, I want to be clear about something. I am not saying put everything into gold. A 5 to 10% allocation has historically reduced overall portfolio volatility without meaningfully reducing long-term returns. Gold is not a bet, it is a balance. So the case for gold is clear. The question most people get stuck on is, how? Physical gold is expensive to store and difficult to sell quickly. Gold mining stocks add company risk on top of commodity risk. A gold ETF removes all of that friction. You buy it like a stock. It tracks the price of physical gold bullion directly, and you can sell it any trading day. Here is exactly how it works. When you buy shares of a gold ETF, you are buying into a fund that holds actual physical gold bars, stored in a secured vault with a major custodian bank. The fund's price moves in near-perfect lockstep with the spot price of gold. You never touch the gold, you never store it, but you own a proportional claim on it, inside your regular brokerage account. One of the most widely held options is GLDM, the Spider Gold Mini Shares. It holds physical gold bullion, is regulated by the SEC, audited independently, and has an expense ratio of just 0.10%. That means for every $10,000 invested, you pay $10 a year in fees, meaning you could start with one share today from Singapore, Hong Kong, London, or Toronto. That is the democratization of an asset class that used to belong exclusively to central banks and institutions. So let me bring this together. We are in an environment of elevated geopolitical risk, persistent inflation pressure, and the strongest institutional demand for gold in modern history, backed by World Gold Council data. Gold ETFs give retail investors direct exposure to physical gold bullion, regulated, liquid, and accessible from any brokerage account. In the next video, I'll go deeper, comparing the major gold ETFs side by side, breaking down the fee difference in real dollar terms, and giving you a simple framework to decide which one belongs in your portfolio. Subscribe so you don't miss it. Gold has protected wealth across centuries of uncertainty. The only question is whether you have access to it. Now you do.